Good morning. It's Monday, October 21st, about 6 a.m. Central Time. Overnight, the precious metals exploded on Sunday night, following through on Friday's rally. So to recap real quick on Friday's performance, we did have gold up $28 at $27.37, closing on the high of the day and basically making a new all-time high. So silver, that was the shining star here of Friday's price action, up $2.15. It was a 6.77% rally at $33.92. So just an explosive move in the silver market and just a constant bid underneath price action here. So the copper market up $6.70 at $4.39 and platinum up $19 or 2%, closing at $10.25. So looking at the overnight price action, an extension higher in those metals markets. You got gold up $16 at $27.46. High was $27.51.40. Right around there is going to be a resistance point here on the moment. But again, it's how does the 8:30 open and what data points come out here during the day's session to really drive that momentum higher. So looking at the silver market, that was the big mover and shaker Sunday night. My phone exploded right at that 5 p.m. open with a lot of people positioning, taking profits, covering shorts, adding to longs. So just a lot of volatility, a lot of price action. That's why it's really important to have a futures trading account in order to potentially capitalize on that, because there's no telling where silver is going to open up. You still got about 3.5 hours before that cash opens here, and prices could be anywhere. We do have U.S. equities selling off, the dollar index rallying at the moment, and it could really weigh in and impact where silver's at. We've seen a lot of these Sunday night squeezes higher in markets capitulate. I'm not saying that's what's going to happen, but again, that's why it's really important to have that futures account. And there are 1,000-ounce silver contracts, which make it a low barrier to entry for people playing the precious metals. So getting into the copper market, up 440 at 442.80, high 445.70, and then the platinum market 1026, only up $2, was at 1033, low of the session 1023. So we're kind of at that lower area on the platinum market. So we're going to want to keep an eye on that. We did have an escalation of things with a drone attack near Benjamin Netanyahu's home, and that's why I think that crude oil price is up $1.48. If you're working with us, we on Thursday and Friday started adding to that long crude oil position in anticipation that inflation surges back higher, dollar index catches a bid, and the potential for a re-escalation in the Middle East. So looking at some things that are coming out today, we're going to have about 4 Fed speakers. We have the IMF meetings, and we have the leading index month over month. So no real big mover and shakers. The Fed, it'll be interesting to see what they say, but you go later in the week, that's when we get the BRICS summit. Everyone's watching that, although Brazil is not participating. Then you get the IMF meetings, you get Beige Book. Then Thursday, you get the unemployment claims, the flash services PMI, a lot of PMI data coming out globally. So something else you should also do, not only find a US calendar, but also find one that covers, all the different countries out there, and be able to identify some things that'll impact your particular market. Like we had LME inventories were released for the copper market last night, and that also helped escalate and boost some of those prices in the copper market. So one thing I'm getting a lot of questions on is like, what's really driving this rally? What had changed from 2 weeks ago, 2 months ago, 6 months ago to really impact this thing? So many people are going to regurgitate what is widely known for months as if it's a new development. So I saw a lot of people talking about, hey, the supply-demand deficit for the silver market. The Silver Institute has projected 215 million ounces of a supply-demand deficit. That information came out at the beginning of the year. Or the increased precious metal holdings with Russian sovereign wealth fund. That's been known for several months now. So, however, there's been a technical, broad-based rally amongst these metals here over the last few sessions. And oftentimes there's this checklist that you got to go through for what drives the direction of any commodity. So silver's kind of new drivers in the past week, and we go over a lot of these different things. Like we look at the CME's Fed Watch tool and we monitor how it shifts around. So we saw Fed policy shifts. Now, if you look at the Fed watch tool, 90% chance that they cut 25 basis points, only a 9.9% chance that they leave rates unchanged. What does that mean? Remember, we've looked at the retail sales data. We've been monitoring employment claims and things like that. We monitor the way that the Fed shifts and then the perception of how it moves the dollar, how it moves these different commodities, and then how it plays out with the trickle-down effect in the commodities we are trading. So there is a lot of speculation, again, around the BRICS meeting. We saw a lot of people going into the gold market in anticipation of that. If you don't know what that is, it is Brazil, Russia, India, China, and South Africa. They're basically looking to establish a new reserve currency backed by a basket of their respected currencies and other potential components. That's where the gold market comes into play, potentially silver and things like that. Really, the defining point last week in the silver market was China's growth momentum. It was driven by stronger industrial production. I've told you for months that, silver is predominantly an industrial metal. It's not necessarily this precious metal that people hold. Only a finite amount of you actually hold any physical silver whatsoever. We saw the industrial production data. It grew 5.4%. And most importantly, it grew in the high-tech industry, which is green energy, automobiles, industrial robots, integrated circuit manufacturing. These are the things, the components of your phones and things like that require silver, copper, gold, and some of these precious metals in there. We also saw a technical breakout. What does that do? It draws in market technicians and momentum traders. So it doesn't matter what you're trading. It was multiple years ago, it was AMC broke out, all the ape stocks, things like that, the NASDAQ, Bitcoin, blah, blah, blah. It doesn't matter. You're going to bring in these new speculators. Now, when you bring in the new speculators, you bring in these crowds. And I want to talk to you about crowds for the moment because, there's a book called The Extraordinary Popular Delusions and the Madness of Crowds, which is by Charles Mackay. And I'm not saying that this is a crowded trade, a bubble, or anything like the tulip mania whatsoever. What I'm telling you is that once the crowd has entered your market, so the crowd has now entered that silver market. And what do I mean by crowds? I mean money managers, hedge funds, algorithms, dark pools, excessive speculators, the YOLO crowd. It becomes a different dynamic where the ordinary becomes extraordinary. So if we look at how that's defined, look at the average true range. $2 moves in silver. They don't happen every other day. They happen once in a blue moon. And then we see what happens from there. So we've got an extension of another dollar higher here in the overnight session. The crowd has entered it. And we've seen many of these types of trades here where chaos starts to ensue. So we saw this in the cocoa market at the start of the year, followed by the copper. That's when we got that squeeze. Remember, silver in May shooting to the upside. Copper prices, this was it. It was going to the moon. They were drawing down the LME inventories and things like that. We saw sugar just take off to the upside with the fires in South America. And we saw crude oil futures explode higher on those Middle East tensions where things became unhinged. And what happened shortly after? Crude oil futures corrected. Now they're rallying back up. So these markets go through these different cycles. So how do you measure the crowd and how much of the crowd is playing into your market? Use an implied volatility table. So implied volatility on the 1 month options for silver jumped to the highest level since May. That's when the copper squeeze. That's when the silver squeeze occurred last go around. So, and this is where the call skew becomes the most in the month. What is that? That means there's more buyers of the call options than the put options. That shifts the skew. So this is where things really start to play an impact on your trading. So you really want to, again, with the silver up $1 an ounce, practice emotional discipline and risk control. It sounds simple, but it is the number one reason why futures traders and other traders of any other thing, options, individual stocks, why they fail. So back to silver, define your core position, whatever that is. How do you define that? It is trading a size that you can execute seamlessly, just going through the rhythms, passing the ball, things like that. Triggers no emotions whatsoever. Saw Russell Wilson last night just executing. First game back, executing. No emotions. Got right in there and did the job. So it's quiet confidence and self-control that gets you going. So this is where it becomes essential to have a trading plan. You want to outline your levels in the silver market. I had a lot of people asking me, how do you trade $34 silver? It was the exact same way I traded at 32, at 30, at 28, at 26. I look at it, I define my risk, I outline my levels. I recognize that I will most likely, nor will anyone else, buy the bottom, sell the highs, meaning it often takes adding positions incrementally in order to be successful, and also, again, executing on your plan. So you want to define your minimum position size, your maximum position size, and be prepared to volatility adjust these positions. Will I hold as many silver contracts for clients when it was only moving 40 cents a day and we were trading at $26.50? Or will I hold less contracts because of the fact we're moving $2 or $1 every single trading session with high degrees of volatility and new speculators and components of the market? I'll pare those positions down. So you want to really prepare to volatility adjust your position, and your trading strategy should change when the dynamics change, and finally execute your plan. So this is a lot surrounding how to trade this silver market, what new things have happened. And as far as levels are concerned, because of the increased volatility, I'm going to have to take a step back and look at these things. Some other things to note is that U.S. equities are under pressure right now. The dollar index is rallying. Some of these other markets are giving up some of their gains from these heightened levels. So as far as silver is concerned, what am I going to do? Ratchet up the stops. Buy cheap defensive plays. You have car insurance, you have auto insurance. You don't crash your car every day. You have health insurance. You don't end up in the hospital, the ER every day. That's where I might look at some protective short-term put options as well in the silver market. So a little bit longer video, a lot about process here. So you got any questions, give me a call. I'll be on the Yahoo Finance. Give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.